Now, the cash flow statement actually can be prepared in two different ways, using what's called a direct method or using what's called an indirect method. Now, the difference between these two methods is in how the cash flow from operating activities are derived. Regardless of which method is used, the results in cash flow from operating activities will be identical. The indirect method is much more commonly used than the direct method. Now, if you want to learn how to calculate cash flows from operating activities using both methods, check out our Accounting Fundamentals course. Okay, let's apply what we've learned by looking at Starbucks 10K statement of cash flows or cash flow statement. Now, one of the things you're going to see is the operating activities section is almost always using the indirect method, which means we start with net income, a profit figure, and we add back all the non-cash items. So what we're going to see here is what's non-cash. We're going to see always, almost always, if not always, depreciation, because that's a non-cash expense. We've also seen how deferred taxes need to be adjusted for. And in this case, we can see our deferred taxes. So we've actually seen these already. There are other non-cash expenses or revenue items that are captured here in these sections, such as equity method, our income earned from our equity method investees, where we have significant influence. So you can see that's one category. But then the second category I just want to highlight is cash provided or used in changes in operating assets and liabilities. And that's where we're going to just track changes on the balance sheet between last year and this year as it relates to things like accounts receivable, inventories, and payables. That ends up giving us our net cash provided by operating activities, which we see here. Remember, they're in millions, so we have just over $6 billion of operating cash flows. Now, what can we do with those cash flows? Well, the next step is the investing. And let's see what actually is in the investing. You can see sometimes you'll see small items like purchase of investments or sale of investments. But for a retailer like Starbucks, the largest item you should expect to see is investment in stores and equipment. And you can see that number dwarfs all others. Additions to property, plant, and equipment. We're talking about over $2 billion in the most recent year end. 1.8 the previous year and 1.4. And again, there's a small sale of assets, which would be a cash inflow. Recall that the additions to property, plant, and equipment are negatives because it represents a cash outflow. Okay, so they have operating cash flows more than enough to cover their investing activities. Now let's look at what happened with their financing. And because they have a lot of operating cash flows, let's look at the largest item here. Well, first of all, before we go to the largest item, you will typically see separate line items for proceeds of debt issuance and repayment of debt. They're not netted off. So one of the things you want to watch for is I often want to compare them together. And if there's hardly any change, and I'll give you an example. Here we have new debt, but we also repaid debt of 1.5 billion, but we repaid 1 billion of it. So really that looks more like about 500 million that we've raised. And you can see there's other debt facilities that, again, I would take all those and add them up together to get a real sense of what's happening. Because sometimes a bond is just maturing, and so we're just refinancing by issuing a new bond, but we have to record it separately. Then what we see, the largest number here was the dividends paid to shareholders. So retained earnings, yes, is negative. We have a retained deficit, but that is over 2 billion paid to shareholders in the form of dividends, as well as they repurchased some of the stock. Those are negative numbers because it's a cash outflow, dividends going out of the company, and share buybacks, that's again cash going out of the company. So in terms of financing activities, those are negative. So we net paid back, either bought back shares or paid down debt. They're all negative numbers. And so what we're left with at the end is, I'll give you an example. Here's our 6 billion. Roughly 2 and a bit went to investing. Roughly 3 and a bit went to financing, which leaves us roughly at 1 and a bit. Well, technically it's 733 million. There's our opening balance, which is the same as the closing balance from the previous period. And that gives us our end of period balance, 3551.5. And of course, that number needs to always match the number on the balance sheet. And I'll just go Control-Shift-N, 47. Of course, we already know that it does. There's the 3.5515 billion. And that's how you navigate through a cash flow statement. Now what we'd like to do is we'd like you to download the Starbucks Financial Statements template. And we're going to start you on your journey of financial analysis and financial ratio analysis. And we're going to do this in 3 different steps. So if you want to follow along with me, that'd be great. Or if you want to pause while you work on it with me, here we have an Excel workbook. And I'm going to go to the next page. And I'm going to go Control Home, just so that I'm at the top. Now, one of the challenges, of course, with a 10K is then we need to enter the data into Excel or some other software so that we can start building a model to analyze historic performance and possibly then do a forecast. Now, one of the things you saw in the 10K was that the most recent year is on the left. Unfortunately, we have to invert that because Excel works from left to right. So one of the things you're going to see right from the get-go is that the earliest year now is in column C. Then we have column D and E with the most recent year in that column E. Now, one of the things we're going to do is let's just make sure everything adds up. Now, remember also, if you can download an Excel version of the 10K or annual report, that might save you a lot of time. And then you're just formatting it and maybe moving columns around as opposed to having to manually enter. Now, I'm going to just quickly put some sums in here so we get our financial statements done. Once we've done that, we're going to do some introductory fundamental ratio analysis. And then finally, we'll do something called a common size income statement. Okay, so what I'm going to do is I'm also going to try to use shortcuts. And you probably, if you've done any of our other courses, we strongly encourage you to get off the mouse as much as you can and just stay on the keyboard and learn some shortcuts. You'll go much faster and you'll be able to work and be much more productive. So I'm going to hold down the Alt key and go Alt equals. And that automatically sums up to wherever there's a break. And then I'm going to highlight the cell and I'm going to go Control R. And that Control R stands for fill right. Now, we also, can you see the blue font is for inputs? Black font is meaning it's a calculation or formula. We also believe it's best practice to always put expenses in as negative items so that you only ever have to sum and you're not having to accidentally add something and minus something. You're only summing. So I'm going to go Alt equals, but that's what the brackets are. Everything, oops, sorry, Control Home. That's why we have those brackets. Then what we need to do is we have our operating income, and that's our EBIT, but I'm just going to scroll up. What we need to do is we're going to take C12, we're going to add C20, but then we're going to also have to add the items that are in rows 22 and 23. We're going to copy that across. Then we're going to sum this all up. I'm going to just highlight. Now, let me just go back. If for a reason it's not going all the way up that you need it to do, one of the things you can do, and I'm just going to do it again, Alt equals, you can just hit an arrow key and then highlight Shift and the arrow key to highlight the cells you want. Okay, just make sure that's copied. Alt equals, I'm going to just do that. Copy it across, again, Control R. And finally, I'll do it this way. And the earnings per share should automatically be populated. Okay, let's do the same thing with the balance sheet and the cash flow. Okay, if I'm going too slow, just go as fast as you can. Here we go. So we have our current assets, copy that across, and then we have our total assets. And I'm going to do it this way, Alt equals, then I'm using the arrow key, Shift, hold it down to get all the area, Control R, fill right. We know this balance sheet has to balance, so that's our check there. Alt equals, it's not capturing the 915.8, so I'm going to use the arrow key, then push Shift, highlight that area, Control R for fill right. Alt equals, Control R. I'm going to add these two together. And then we have total liabilities and shareholders' equity. Make sure they match. Whoops. 27978.4. Let's scroll up. 27978.4 and 29445.5. Good. Now, last thing we have to do is the cash flow. So I'm going to scroll up Now we're going to have to do alt equals, but we're going to be summing everything from the beginning. So from row 113 all the way down to row 134. Copy that across. We're going to do the same thing with investing activities. So let me make sure. I think what might, yeah, okay. And then we go alt equals, copy that across. And then we have to just basically do this. We have to go operating plus investing. So that operating is 135. Investing is row 145. Financing is row 158. And then we also have to do the currency effective FX. So we're going to capture that. Okay, so we know that, let's just make sure we have, that's the end of period, that's the beginning of period. We have a check here, and the check is basically saying, what's the end of period? Let's just make sure those are input, but let's just do a check. We know beginning of period, so we're going to go equals that plus, good. Let me just do Control Z or Control Z. Remember, that was an input. What I'm doing is over-typing with the formula to make sure it is actually working, because that's our sanity check. Now, what I could do, and I'm going to just leave that there, I'm going to just put it right below. There we go. That's the formula. And we're just doing a sanity check. Good. So we've got all our financial statements in. Again, we already did a lot of the inputting for you. Remember, blue input always for a constant, a hard-coded number. Black is for any type of calculation or formula. See you in the next lesson. Now that we have the numbers, we're going to calculate some core ratios. Okay, see you in a second. One important step once you've started reading the financial statements is to start analyzing the financial statements using a wide variety of ratios, whether they be profitability ratios, returns to shareholder ratios, liquidity ratios, and so on. Now, this is just a taster, a starter. If you want to understand how to do financial ratios and analysis in more detail, you must check out our Financial Analysis Fundamentals course, where we go into these ratios in a ton of detail. So one of the ratios, in terms of a margin ratio, is really what we call net profit margin. And there's different, you can have an EBIT margin, but net profit margin means we're going to take the bottom net income number from the bottom of the income statement. Now, I'm going to just hit plus, and I have to scroll up. We need to go to the income statement. That's right at the top. I'm going to find row number 35. Because we want to calculate the net profit margin for shareholders of Starbucks. So that's after non-controlling interest. So I've got that. Now I need to go to the very top. I need to know net revenues. And I'm just going to go, I'm hitting page up to get up there quicker. And my total net revenues is line row 12. Now I can copy those across. Now, net profit margin is always quoted as a percentage, and I basically take my net earnings and we divide it by our total net revenue. And I'm going to copy that across. And the way you read this is I'm just going to pick on the most recent year. One way I like to read it is for every dollar that Starbucks sells, 11.5 cents is left of that dollar for shareholders. That's how you can read the net profit margin. Now, another type of ratio is something called a return ratio. We can do return on assets or return on equity. In this case, we're going to do total assets, and we're going to use an ending balance. Okay, but recall the reason we put an NA here is that in a 10K, you get 3 years of an income statement, 3 years of a cash flow, but only 2 years of a balance sheet. So we can't calculate in the first year, but we already know net earnings. I'm just going to link it to right here and copy that across. Save me a bit of time. And now I need to go to the balance sheet and find the total asset number. And that total asset number is in row, just a bit higher up. There we go. Row 68. We'll capture those two, copy that across, and then we just divide net earnings by total assets. And here we have somewhat similar numbers, but the way you interpret this one is for every dollar invested in assets, how much are we getting as a return? And we're getting a 14% return on our assets. And we're just using the ending balance. You could use average balances. There's different ways to calculate the ratio. That's called ROA, or return on assets. Okay, there's two more. One of the things you'll know if you're in finance and banking, you'll hear it all the time, cash is king. It's really important to understand cash. So, and also liquidity. So we're going to do a liquidity ratio. It's called the current ratio. And it basically, we need to take our total current assets. So we're going to the balance sheet. And there's total assets. There's our total current assets, which is row 58. And we're going to divide that by our total liabilities. And what we want to see here is, do we have enough current assets to cover what we have to pay out in the next year? Remember, current liabilities are things we have to pay in the next 12 months or in the next year. So we want that ratio to be more than 1 generally, but different industries can operate at different levels of liquidity. So I've got that. I need total current liabilities. So I'm doing page up, and I'm trying to find total current liabilities, and that's in row 79. So capture that. And copying it across. And normally this ratio we don't represent as a percent. We represent it as what we call a times ratio. So there's going to be a little X behind it. And so I'm going to just say, okay, current assets is the numerator divided by the denominator. Now we can already see there's not enough current assets to cover current liabilities. So that number is going to be less than 1. What is it? It's 0.77 times. And you can see that's the convention of how to present it. So, but Starbucks is so large, and cash walks in the door every day. Every time someone buys a coffee or something, cash is walking in the door. So in Starbucks' case, I'm less worried that this is below 1 because of the nature of their business. So cash is walking in every single day. Okay, now the final thing we're going to do is a proxy for what we're going to call a simple free cash flow. And basically what I mean by simple free cash flow is how much cash does the business have to play with after covering its CapEx? So what we're going to do is we're basically saying, let's get the cash from operating activities. And that we find that in row 135. And we say, okay, how much free cash is left over after we do all the investing activities we want to do? And if there's stuff left over, we call that a simple free cash flow. So I'm going to go plus, or you could put an equal sign in there. You know this is going to be a negative number generally because you want a company to be investing in its assets. So you can see it's negative across all 3 years. I'm going to put it though. Yeah, good. I'm going to put it there. Good. And then I'm just going to sum them up. And what that gives us is a sense of how much cash is left over, free cash that we could buy back shares, pay out dividends. We could pay down our debt. That's a simple free cash flow. Okay, so that's a taster of some core ratios, which would be the next step after you've entered the data in. I just want to show you one more thing, and that's a common size income statement, and show you why that's also valuable to do. And it's a set of different ratios. Okay, see you in the next lesson.